we felt it would give us the best access to the strongest possible group of senior insurance decision makers.
Insurtech Insights is a must-do conference, I think, for the network that is built here.
So, if you're interested in beyond traditional factors, advancing precision pricing and risk assessment, you're in the right place. My name is Kevin McLoughlin. I am a partner and co-founder of MTech Capital. We are a venture capital firm focused on Insurtech, and that includes asset management, employee benefits, and some health tech. And we have offices here in London, where I'm based, and in Santa Monica. And now I'll ask all of our panel members to introduce themselves.
Hi, everyone. I hope you can hear me. I hope you can see me. Unfortunately, because of all the haze, I can't see anyone, so maybe it's better that way. I'm Aditi Subbarao. I lead the financial services and strategic partnerships function at an AI company called Instabase, where we work with some of the world's largest enterprises in helping them use the power of generative AI to unlock unstructured data. And as you can imagine, that's everywhere in the insurance space, so I'm looking forward to this conversation.
Good morning, everyone. I'm Massimo Cavadini. I'm a senior director in WTW and heading the PPCU, so product pricing, claims, underwriting proposition in continental Europe. Very excited to be part of this great speaker session and discuss about the future of pricing with my colleagues and all of you.
Good morning, everybody. I'm Tim Smith. I'm head of protection at Hannover Re in the UK, so responsible for business development, pricing, and in-force management for all the protection business, so life insurance, critical illness that we do in the UK. So helping insurers in the UK optimize their financials, improve their balance sheet, develop their products, and sell more.
Hello, everyone. I'm Elena Rasa. I'm the Chief Underwriting Officer for the AXA Group, with the focus on the retail business, personal lines specifically. And my topic is basically raising the bar in technical excellence for the AXA Group going forward. So overseeing all the entities, all the countries involved in the project.
Excellent, thank you. All right, first question. So many people would say that to date, AI and its various forms, notably machine learning, have not revolutionized underwriting and pricing as we would have hoped. Do you agree with that? And do you think that generative AI is a technology that will finally revolutionize underwriting and pricing? We can just start in order. Aditi.
In order, excellent. That's the advantage of sitting right next to him. I would have to say yes. The revolution is very much yet to happen. The rulers in the kingdom are still very much Excel sheets, manual processes, stacks and stacks of paper, but more importantly, linear thought processes and very traditional ways of both issuing and pricing protection, because the risk has to be managed with the limited visibility that we have at the moment. The reason for that is that our or the insurer's understanding of that risk is predicated on a very small part of the data that relates to the risk. So as of now, the technology that is available was only capable of dealing with well-behaved data, structured data, that which you can organize nicely, that which is in databases or spreadsheets again. However, I strongly believe that all of that can be changed with generative AI. We now have technologies, we now have the capability of understanding really complex, really messy data, creating a much richer set of visibility on the risks that we are underwriting and pricing, and therefore being able to automate all of those processes of underwriting, being able to analyze all of that data better, and then even see and search and process that data wherever it lives across the organization. So I think we are definitely at the cusp of something big.
I agree with what you said, particularly when you're referring to the difference between Gen AI and AI. Let's call it traditional AI, what was called AI 5 years ago, that 10 years ago was called statistical learning and so on. But conceptually, I think we have seen an evolution in the application of, and I'm talking about, let's say, retail business mainly. We have seen a natural evolution in the application of machine learning, traditional AI, simply because that answer a specific question, right? So you have a clear problem to be solved, structured data, as you said, and then you can apply a certain algorithm. And I think here Insurer played a lot with different type of sources, with different type of algorithms, and now we see that pretty much this has become a sort of commodity, right? So it's very important to be disciplined in pricing, but I think I don't see any further huge revolution in that side. It's pretty much stabilized. When it comes instead to Gen AI, which dealt very well with unstructured data, well, then the applications are still to be seen. We are just at the beginning. There is a bit of impact on pricing, probably more impact on underwriting, in claims, in processes, definitely. But there are still many things that will come in the next years.
Sure. So I think I have a slightly different perspective, maybe because the life and health industry has slightly different dynamics here. I wouldn't say it's necessarily been a revolution with the introduction of AI, but I think there is constant striving to be as accurate on price as you possibly can be. We're writing very long-term products that last 20, 30 years, and the price is locked in for those products. So if you're wrong about the trends, you can't just correct that the following year. You're locked into that for the duration of the product while it's selling. So I think there's a lot of focus on identifying the trends, identifying small pockets of business that perhaps aren't performing as well as they should be. And I think some of the techniques that we have available to us these days are more accurate and better at telling us what's going on. So if you look at the last 10 years of a company's portfolio of the business they've sold, and it looks like it's getting better over time, that could be driven by the fact that it's genuinely getting better over time, or it could be that once a policy has been in force for some time, actually the experience you're seeing is far, far worse, but it's only the older business you have that you see that worse experience. So it sort of masks and looks like it's getting better over time. And I think some of these techniques that we have available now can really pick up some of these trends, and you can really understand what the genuine drivers are. On the Gen AI side, I think in its current guise, from a pure pricing point of view, I don't see huge applicability. I think there are uses for Gen AI in our industry, but I think the more sort of traditional AI methods are probably still king at the moment. I think Gen AI has probably made a big splash because it's the closest thing that looks like AI and that it can come up with a plausible answer to any question that you ask it. But that doesn't necessarily make it an expert in everything that you ask it. And so I think some of our sort of traditional AI methods perhaps are bearing more fruit at the moment.
I would say it is a revolution. If it's a disruptive revolution, is a completely different story. And I think you still have a lot to do to reach the level of disruption that other industries have reached. Even though there are hundreds of use cases currently underway in the insurance market, what we need to do is to actually make sure that if we sum up all these use cases, we end up with thousands of them. Then deploying them in a structured and meaningful, with financial impact way is a completely different story, and that's really where we need to push more and more. And this is basically our role. We have high-speed computers available, thousands and thousands of data, pictures coming from the satellites to assess the risk better and better. We have a lot of unstructured data coming from the web, searching and testing, A/B testing, the impact of those informations that we are able to analyze now with the AI, Gen AI, and so on, it's really the way to bring this insurance sector forward, to really move into a disruptive type of approach, which will make this a real revolution.
So I'm hearing that it's still early to assess the impact of generative AI on underwriting and pricing. But when we think about the strengths of Gen AI, one of them is certainly classification, summarization. When you think about how Gen AI may be used increasingly in underwriting and pricing, would it be more along the lines of segmentation of risks, just more granular analysis and segmentation of risk, or do you see it kind of more machine learning style, looking to recognize patterns with predictive power that we haven't seen before? So, Elena?
Yeah, I think it's a combination of both. So we have, for sure, additional factors that we keep into consideration now in our modeling approach. But there's also a huge potential for segmentation, which means that we can get to the details of the customer, obviously without losing significance power, because that's really, it needs to be solid from a technical standpoint. So it's a bit of a combination. So these new technologies, these new methodologies allow us to understand if new factors can really explain part of the risk, and also allow us to get to a more granular view of the customers. And this is really what we need to find out. And with this high-speed computers power and with these methodologies, this is really what we need to do. So understanding the hidden pattern, which were not, the traditional actuarial methods were not able to capture, understanding interconnections between different factors, identify proxies. We know that some markets are highly regulated, and sometimes we need to identify proxies to, substitute variables that we are not able to use anymore. So this is really the strength of the tools. And, having the power of testing and testing and testing and learning really gives us, in the end, the idea of how risk can be really identified at the maximum level of granularity possible.
Tim?
Yeah, I would agree with that. I think there is definitely potential in terms of increasing the granularity of our pricing, and I think that's something that certainly all life insurers in the UK are really striving to do. I think you can debate whether that's a good thing for society, but ultimately, I think with our capabilities, you have to do it, or you get picked off by others. I think there's a real potential for Gen AI, particularly on the medical underwriting side. So it is very good at summarizing information. And so if you have 200 pages of somebody's medical records and you need to make a decision about what risk that presents to you, it's a lot quicker for Gen AI to do that than for a person. And they don't always get it. The Gen AI systems might not always get it right, but then a person wouldn't always get it right. And I think we shouldn't forget that. And ultimately, you should be able to measure how wrong it's likely to be, and then that's just a risk tolerance question at the end of the day. So I think in terms of efficiency, there's a lot of efficiency gains that we can get from embedding this technology.
Massimo?
Definitely, probably the biggest impact of Gen AI will be on the underwriting side, on claims side, on processes, right? Where you have to deal with unstructured data, different sources of data. You have to summarize. You have to improve all the processes, identify specific trends. Probably this is where we will see the biggest impact. Wise, as I said already, in the traditional pricing. The situation is, the impact is probably less relevant, although, as Elena was mentioning, you can always use Gen AI from unstructured data, capture certain information, structure this data, and then factor into the, let's say, traditional AI, and then get new result, better segmentation.
One of the challenges we have at MTech Capital is at a moment like this, when technology is changing so fast, what does kind of the end game look like? And in that regard, where we see how accessible Gen AI is to a lot of companies, a lot of individuals, and they kind of feel comfortable working with it because it is relatively easy to use at that level. But we also, at the same time, have made a few investments already in some companies using applied AI to solve certain problems, like, let's say, risk or litigation risk, evaluating it. And it plays to the strengths of Gen AI, again, in kind of classification, summarization, and comparison. So one of the things we're asking ourselves is whether insurance companies themselves will deploy Gen AI for underwriting and pricing, or will we see the development of independent companies doing that and then sell that service to insurance carriers? Aditi?
Very strong opinions on that, Kevin. But I'd like to just get a sense check across the room. Raise your hands if you work for an insurance or related company, i.e. broker, insurer, reinsurer, etc. Okay, thank you. Raise your hands if you work for a technology company or platform or workflow company or underwriting workbench or something like that. Interesting. Okay, thank you. The reason I asked that question is that the answer changes depending on whom you ask. But I think one of the great things about generative AI is the way it made the entrance, right? It burst onto the scene with ChatGPT. Everybody and their aunts and uncles could start writing cat poems or all sorts of things using Gen AI. And what that made people feel is that this is so accessible. It's so easy. I ask it a question in English and I get what you want. But exactly like Tim said, what you get isn't always the right output. And I think that journey has played out very interestingly in the enterprise space over the last couple of years. We have worked with so many customers who 2 years ago said, well, I can just get my own API into OpenAI. Like, why do I need anything else? I'm going to build this on my own. And then they realized that an LLM is not all you need. It's all very well when you want to write a poem to wish your partner happy birthday, but when you want to solve really complex problems at a large scale in regulated organizations, you need so much more pre-work and post-work to be able to get genuinely meaningful and output which creates business value. So what we have seen is all of those companies are now coming back and having conversations which come back onto the core principle of technology adoption, which is strong collaborative partnerships. So it's not just about insurance companies building by themselves, but there is an entire ecosystem out there of data companies, of cloud storage providers, of technology companies, of platforms like Instabase, where we are all now working together to effectively give the tools, to give the foundation. It's almost like a toolkit, right? You don't go to a builder and say, okay, here's a screwdriver, go build my own house. You give them a toolkit, and then depending on what they need, when they need, in conjunction with a carpenter, with an electrician, with somebody else, all together, they stand the whole house up. And that's very much the story with generative AI. I strongly feel that the need here is to find the right partners, find the right technology across your stack, which then helps you accelerate the building of those solutions, and most importantly, also distribute them across your organization and across your customer base. And for the record, I'm not saying this because my company told me to. I do lead partnerships, but I genuinely believe that is the way forward. But I'd love to hear the panel's thoughts on that.
Massimo.
Yeah, no, in general, I agree, Aditi, what you said. I think it's probably also will depend on the evolution of the LLM space and what is happening on that side as well. Because, as I said, we are just at the beginning, right? So till, I don't know, 4 months ago, right, there was the idea that to enter into the war of LLM or the space of LLM, right, you need there was a huge entry barrier driven by huge cost, investment costs, data, training, time, and so on, expertise, etc. Then came DeepSeek and destroyed that conviction, right, in, I don't know, 3-4 seconds, and then people realize, oh, okay, but then it's changed completely, right? And it's still not clear what is going to happen. So definitely, in principle, I agree what you said. So insurers should focus on what's their core business, which is taking risk in the right way. And yes, so here they will have the biggest expertise. When it comes to technology, it's always difficult to understand, build or buy, what to do, etc. But this will be, particularly with LLM, I think we are just at the beginning, so it will depend strongly on what is going to happen in the business model of the company that sells LLM, right? So if they are going to, which kind of solution are going to provide, and based on that, then company can decide if to rely on external parties, try, maybe with open source to build their own, but for sure it's not something as easy as thought, and fully agree with you, it requires a lot of expertise in understanding properly this technology before seeing the real business cases.
That's a good segue, actually, for you, Tim, into what do you see as the dangers of these more advanced techniques, and how do you see insurance companies managing these risks?
Yeah, so I think for me, probably one of the main dangers is a lot of companies talk about being data-led, and I think that's great. We should be data-led, but we shouldn't blindly follow the data. And I think one of the biggest dangers is that these technologies become a bit of a black box. It spits out an answer, and everybody just follows that answer blindly. And some of these techniques, they sort of fit something to the data, even if the trend's not particularly strong or something. And so you have to be quite careful. And I think the way you manage that is that realizing that having all of these techniques is no substitute for really understanding your market, understanding your customers, understanding the dynamics at play, in my world, in sort of mortality and morbidity and pressures on the NHS and all of these sorts of things that are going to drive these trends. If you observe a trend in some data, then you need to be able to explain that trend in order to confidently price with it. Otherwise, you don't know if it's a blip or if it's going to stop tomorrow or if it's going to carry on for the next 30 years.
Elena?
Yeah, I would add one. I completely agree with Tim, and I would add a piece about the data. Data is, as we all know, saying in a polite way, garbage in, garbage out. And this is a real danger that we're running, because we are assessing so many data, unstructured data coming from all over the places. And sometimes we really need to be expert in the field to understand if data are biased, or even the use of data needs to be questioned. How much can we push us in the use of it? We need to always keep in mind that our objective is to improve risk assessment, improve customer journey, but making sure that the data that we use don't bring us to tricky ways, and which means that we need to be very careful how do we assess them, and treat them always with ethics, social responsibility, fairness. So, this is the other danger that I really see in the fields of insurance, where having a good relationship with the customer is super crucial. And we need to establish the confidence in our customers that we will treat their data in the best possible way, in a lean way, without, with transparency, with fairness in the end.
In light of that, and that it's not every industry that has those concerns necessarily, right? But we work in a regulated industry, and personal data is of paramount importance. Do you see the need to respect that and perhaps dial down a bit, let's say, your Gen AI model, so that there is less room for kind of variability, right? Which can often lead actually to recognizing patterns you hadn't seen before, so maybe a better result, because you need to exercise a high degree of control. Tim, what do you think?
So I don't think it's necessarily about dialing down. I think, you know, as an industry, we're not starting in a great place here in terms of consumer trust. And we have the potential with these technologies to further erode that trust if people feel like we're using their data sort of against them, if you like. So I think one of the key things here is probably transparency around what we're doing. We need to be able to explain why we're pricing in a certain way, and we need to an extent, be transparent with people about that so that they can understand why ultimately they're getting the price they're getting and why potentially that is an equitable outcome. So, yeah, I think that's, you know, I think it is a challenge on the reputational front, but I think the more transparency, the better.
I'm going to jump in there for a second. Who remembers the Occupy Wall Street movement? Wow, distant memory. And in a way, that kind of proves my point, right? Post-financial crisis, the banking industry was at absolute rock bottom in terms of that trust, in terms of having customers believe in the capability and the moral responsibility that the industry had as a whole. But if you look at where they are now, from a digital transformation and technology adoption perspective, it's, one would argue, much further ahead than insurance. And there are so many parallels that we can draw from other industries in terms of drawing the lines around that risk, establishing those levels of control in the usage of data, in the monitoring of positive outcomes for customers, for society as a whole. Like, I'll tell you a story. We work with NatWest Bank, which is one of the largest mortgage underwriters in the UK. With the use of AI, they have managed to increase underwriter capacity by 68%. And I tell the story because loan underwriting as a thought process is very similar to insurance underwriting, where you're essentially trying to figure out what is the risk here and what price am I willing to undertake that risk for. And from that perspective, I think there are so many lessons, so many parallels that are applicable in insurance. But the interesting thing here, exactly like Tim said, is that the magic happens when the business context, nuance, and understanding gets overlaid with the technology. We often see a lot of companies get so caught up whether, oh, are you using GPT? Are you using Claude? Are you using Grok? At the end of the day, it doesn't matter. What matters is what outcome are you creating for your customers? And that is where that business context is so critical to overlay onto the technology in order to get the benefits from it as well.
Elena, did you want to add anything to that? No?
Completely aligned. Yeah, completely agree.
Okay. We've got less than a minute left. I wanted to just see if there were any questions from the audience. It's very difficult for us to see, by the way, from here.
I think there's one over there.
Okay.
Oh, hi. So I work for an insurance company that has quite a diverse range of products that we offer, and one of the strengths we've been able to have is to price each of those lines quite individually, and with greater AI investment, maybe we could break that down to be more and more precise. But do you ever see that it will come full circle to where we could just have almost one model that has complete understanding of the risk being undertaken, no matter what type of risk that is?
If I understood correctly, is your question that with generative AI, you can get so granular and segmented in your assessment of risk and pricing that we're kind of losing the value of pooling for insurance?
Not losing the value of, but in terms of trying to manage a different pricing model for each different line of business, almost saying, hey, we're just going to have a pricing model that understands whatever it is that we're pushing into it.
Right, regardless of the line of business. What do you think? Tim?
I mean, I think theoretically, potentially, we could get to that stage. I think we're a long way from that because I think each line of business has it's very unique. And I think probably if you had a big model like that trying to explain everything, what you potentially might lose is the context of that individual market, and it would be hard to maybe layer on the expertise of your people into parameterizing that model and making sure that you were comfortable with the output. But theoretically, I guess.
Any other responses to that one? Otherwise,
I suppose from a technological point of view, that is possible. And it's almost a choice which you need to make from a business strategy perspective. Do I want to have almost like a umbrella policy or an umbrella way of managing a certain bucket of risk, and then let some be overcharged for, some be undercharged for, one cross-subsidize the other, and so on? Or do I want to then get to a stage where I am taking personalization to the extreme, and it's literally pricing for an individual risk, an individual policy, an individual person? And where you lie on the spectrum, I don't think there are those many constraints to it from a technological perspective. All of those constraints are basically a business choice.
excellent. I think we're out of time. Thank you all very much.
Thank you.
Thank you.
Thank you.
Thank you, panelists.